Hello everyone, welcome back to our channel. This presentation is brought to you by Synergy Business Advisors Noida, your trusted business mitra. Today we are going to understand one very important concept that affects IT companies, foreign subsidiaries and transfer pricing. This is safe harbor rules. And most importantly, the big update in Budget 2026. Why the government has increased safe harbor limit for IT firms to rupees 2000 crores and fixed profit margin at 15.5%. But what exactly are safe harbor rules? Why were they introduced? Who can use them? And how Budget 2026 has changed everything. Let us understand this in a very simple language. What is transfer pricing? First, very quickly, when an Indian company does business with its foreign related company like parent company abroad, sister company, subsidiary, this is called an international transaction. Example, Indian IT company provides software services to its US parent. Now the question arises, at what price should these services be charged? The government says you must charge market price, also called arm's length price. The price at which two independent and unrelated parties would do the same transaction in the open market. In short, market price between strangers, not related companies. To ensure no profit shifting happens, the whole system is called transfer pricing. The problem before safe harbor rules. Earlier, what used to happen, companies calculated their price, tax officer recalculated, huge differences arose, adjustments imposed, litigations lasted for years, some cases went on for 10 to 15 years. This caused harassment, uncertainty, loss of investors' confidence. So government introduced Safe Harbor Rules 2026, or say brought in some amendments therein. In simple words, Safe Harbor means a safe limit. Government says if you earn at least a specified profit margin, we will automatically accept your transfer price. No questioning, no dispute. Follow the margin, you are safe. Legal provision. Safe harbor rules are covered under Section 92 CB of Income Tax Act 1961, which says the board may prescribe circumstances in which the income tax authorities shall accept the transfer price declared by the SEC. And detailed rules are given in Rule 10D to Rule 10TG of Income Tax Rules 1962. These rules specify eligible businesses, turnover limits, required profit margins. Who are covered under Safe Harbor rules? Mainly IT services, IT enabled services, software development services, KPO services, contract R&D, corporate guarantees. Low value group services. Both the biggest users are IT and IT enabled services companies. Early limit. Before Budget 2026, earlier Turnover limits were very small, mostly 200 crores to 300 crores range, and margins were higher, 17% to 20%. So large IT firms could not opt. Even medium firms struggled. Safe harbor rules was limited only to small companies. Game changer is Budget 2026. Budget 2026 has changed everything. For IT and IT-enabled services sector, turnover limit increased to rupees 2000 crores. Operating profit margin fixed at 15.5%, meaning any IT firm having revenue up to rupees 2000 crores in a year and earning at least 15.5% margin can directly opt for safe harbor. Simple example, let us understand with example. Suppose an IT company earns rupees 500 crores from foreign parent. Earlier, it was not eligible for safe harbor TP audit risk. Now after budget 2026, if profit is 15.50 or more, automatically accepted by tax department, no dispute. Why government did this? Main reasons: reduce transfer pricing litigation, clear huge pending cases, attract foreign investment, improve ease of doing business. The government realized IT industry is backbone of Indian exports, so they have given relief. Advantages: no TP dispute, no long litigation, predictable tax, less compliance cost, peace of mind. To use safe harbor, one should file Form 3CEFA, meet conditions of Rule 10TD, follow margin. That's it. Final conclusion. To summarize, safe harbor rules were made to end transfer pricing disputes. Budget 2026 has expanded coverage massively, reduced margin burden, helped IT industry grow smoothly. Now IT firms up to rupees 2000 crores turnover can enjoy tax certainty, no litigation, simple compliance. This is one of the biggest tax relief in recent budgets. This is CA and IP Praveen Agrawal thanking you for watching. I hope this presentation was helpful for you. Please subscribe to the channel for more such business friendly videos. Thank you.